Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good to have you back on. Thanks for making time today.
Good afternoon.
Well, let's start with this decision by the countries of the G7 to support a minimum rate for corporate taxes around the world to stop companies from headquartering in ultra-low tax countries to avoid taxes. The rate would be at least 15%, and Korea actually has a rate higher than that. So how do you see this proposal affecting Korea and/or Korean companies?
Yes, as you said, the corporation around the world should pay at least 15% tax on their earnings. The Treasury Department have said that on Thursday as a part of its push for global minimum for the businesses. The final rate could even go higher than that, according to the Treasury's release. That it said that 15% is a minimum as a floor, and that discussion should continue to be ambitious and push that rate higher. Now, if you look at the U.S. companies, currently they're paying about 21% rate, a rate that was slashed during the Trump administration. And before that, it was as high as 35%. Now, under the proposal by the President Joe Biden, he had initially said that they wanted to push that up to 28% from 21%. But now they have let go of that, and now they're talking about this minimum rate for global international rate. Now, if you look at some of these high growth stocks, including Google's and Facebook and et cetera, these international companies, if you look at the tax rate, it comes in much below than 15% minimum rate. So obviously this would have a negative implication for some of the major international companies who are paying much less tax rates. As far as the Korean companies are concerned, the impact would be probably fairly minimal because tax rate is 15% lower than what the corporate tax rate the Korean company is paying already. And maybe this kind of impact is going to be very different for individual companies per se. However, though, if we calculate the Nasdaq 100 companies overall tax rate, it comes out to be about 12% for the last year. So it's only implication of about 3 percentage points higher if this law passes. So therefore, the overall implication will be much less than original proposal by Joe Biden, where they want to push the tax rate from 21% to 28%. So it will be different for individual companies in the future.
Yeah, we'll have to wait and see if that gets through Congress. Reports saying that Republicans might make that difficult. Now, turning to the markets, stocks overnight on Wall Street were lower on the Dow, the S&P, but a gain of about 0.5% on the Nasdaq. What's the story in the global markets?
Yes, if you look at the overall interest rate environment and what the Yellen, the head of the finance department, talking about, and also versus the Powell, Fed chairman. The Fed chairman and most of the Fed governors are talking about the tapering is going to be coming at a much later pace than what Yellen is saying. The reason for that is because of the labor side is not fully recovered, and the overall inflation pressure that we are seeing so far is just a short-term implication rather than a long-term based. Overall job adding is still much below than what had been since the COVID-19. Still about 8 million jobs been lost since the COVID-19, even though the recovery is coming. And the pace of the recovery is still very slow, which means that the income growth rate is not going to be that significant to push the inflation to the long-term increases. We are seeing as high as 3% interest, the inflation numbers, but most likely it's going to go down to probably 2% because if you look at the salary growth rate for U.S., it's coming in at only about 2% year on year in a longer term basis. So I think there's a question mark in terms of when the tapering is going to come, when the interest rate is going to be raised. What the Fed and the central banks are talking about is that it's going to be slow pace, whereas the finance departments are talking about maybe the pace should be a little bit faster. all in all, we have to wait and see. In any case, the inflation is coming, and the interest rate environment is going to be a little bit higher than before. Therefore, we need to look at the equity market on the basis of what is going to be a long-term interest rate environment. However, though, if you look at the overall earnings growth rate and the return on equity, U.S. companies are showing the highest number. Operating profit margins at 13.1%, which is record highest in history. So all in all, equity looks still quite interesting, positive.
Well, Korean stocks today were a mix, almost flat really, coming off of an all-time high yesterday on the KOSPI. Looks like maybe some profit taking by individual investors. Tell us about the domestic market.
Yes, the Korean market seems to be kind of taking some posture that it might take a little bit more time for the market to go up because you have on Thursday the triple witching day. The futures and options are going to be closing. And before that, obviously, the market's going to be fairly volatile. Main reason for that is because still people are talking about tapering issues. And if the tapering happens, then the interest rate hike by the Bank of Korea might happen faster than expected. However, though, I don't expect the tapering to come in until next year. And interest rate hike is not going to come in until year 2023. If that's the case, the rate hike by the Bank of Korea is not going to happen anytime soon. If it happens, maybe as early as probably end of this year. All in all, so far, people are concerned because of that talk of tapering and interest rate hike in the longer term. However, though, earnings growth rate are very strong, and the economic recovery is very strong for Korea, and we have not seen this kind of earnings growth in the past. So therefore, if the second quarter results comes through by sometime in July, we think that market can go up even higher from the current rate. However, though, in the short term, with this short-term maturing date of the futures and options and the short-term talk about these interest rate hike or tapering, it is resulting into some of the volatility in the market in the short term. Once again, in a longer-term basis, we think that the earnings growth is much stronger than the concern that we're talking about.
Well, before we go, Korea's current account, let's talk trade. This is the broadest measure of trade. Posted a surplus in April. That's 12 months in a row now we've had a surplus. Interestingly, it's also the first April surplus in 3 years. What's happening there with trade?
Yes, South Korea's current account swung to 1.91 billion surplus in May in 2021 from 3.3 billion deficit in the same month or year earlier. Clearly, this is a very positive news. The goods account surpluses widened sharply to US dollar of 4.56 billion from 0.7 billion a year ago, while the service account posted about 0.01 billion surpluses compared to 1.5 billion deficit a year ago. Clearly, this is all coming in as Korea is very sensitive to global economic growth rate. And Korea is very dependent on exports, and global economy is recovering very fast, as we've seen. If that's the case, Korea will continue to show very strong number in the current account, as well as trade surpluses. If that's the case, then Korean companies are making more money, and therefore the equity environment is going to be positive based on higher earnings. So we need to watch this kind of closely. We think that the numbers are going to be even wider as the global economy recovers at the current pace.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.